The world watched in disbelief as Donald Trump defied expectations and clinched the presidency. The unexpected victory sent shockwaves through global financial markets. Investors, caught off guard, grappled with the uncertainty of a Trump presidency. This surprise outcome set the stage for a period of volatility and adjustment in the financial world. The immediate aftermath of Trump's win saw stock markets experience a roller coaster ride. Investors were caught off guard, leading to a frenzy of buying and selling as they tried to make sense of the new political landscape. The initial shock was palpable, with many unsure of what the future held. The Dow Jones Industrial Average, a key indicator of U.S. stock market performance, initially plunged before rebounding sharply. This dramatic swing highlighted the market's initial panic, followed by a cautious optimism. Traders were on edge, closely monitoring every piece of news and policy announcement. This volatility reflected the uncertainty surrounding Trump's economic policies and their potential impact. Analysts were divided, with some predicting economic growth due to deregulation and tax cuts, while others warned of potential trade wars and fiscal instability. The mixed signals added to the market's unpredictability. Currency markets also reacted swiftly, with the US dollar fluctuating against major currencies like the euro and the yen. Traders in the forex market were particularly active, trying to hedge against potential risks and capitalize on the rapid changes. The uncertainty in the currency markets mirrored the broader financial instability. Adding to the uncertainty was the reaction of commodity markets. Prices for various commodities, from metals to agricultural products, saw significant fluctuations as traders tried to predict the impact of Trump's policies on global supply and demand. Gold, often seen as a safe haven during times of uncertainty, saw its price surge as investors sought stability. The rush to buy gold was a clear indication of the fear and uncertainty gripping the markets. Investors were looking for a reliable store of value amidst the chaos. Oil prices, on the other hand, experienced downward pressure due to Trump's pro-fossil fuel stance and the potential for increased U.S. oil production. The prospect of higher domestic output led to concerns about oversupply, which in turn drove prices down. This was a stark contrast to the bullish sentiment in the gold market, highlighting the varied reactions across different sectors. As the dust settled after the election, a clearer picture began to emerge of the potential winners and losers in a Trump economy. Investors and analysts alike were keenly observing the shifts in market dynamics, trying to predict which sectors would thrive and which might struggle under the new administration. Trump's pro-business rhetoric, including promises of significant tax cuts and sweeping deregulation, signaled potential benefits for certain sectors. His administration's focus on reducing corporate taxes was seen as a boon for businesses, potentially increasing their profitability and encouraging investment. The financial industry, anticipating a lighter regulatory touch, rallied. Banks and financial institutions, which had long been burdened by stringent regulations, saw a potential for increased profitability and growth. The stock prices of major financial firms surged as investors bet on a more favorable regulatory environment. Defense companies, with Trump's pledge to increase military spending, also saw their stock prices rise. The promise of a stronger military and increased defense budgets was music to the ears of defense contractors, who anticipated a surge in government contracts and production orders. However, not all sectors shared the same optimism. The uncertainty surrounding Trump's policies created a mixed bag of reactions across different industries. Industries heavily reliant on international trade, like manufacturing and automobiles, faced significant uncertainty. The potential for new tariffs and trade barriers loomed large, threatening to disrupt supply chains and increase costs for these sectors. Trump's protectionist stance and threats to renegotiate trade deals raised concerns about potential trade wars and tariffs. Companies that depended on global markets for their raw materials and finished products were particularly vulnerable to these changes. This uncertainty cast a shadow over these sectors, creating winners and losers in the wake of the election. While some industries prepared to capitalize on the new opportunities, others braced for potential challenges and disruptions. The balance of sectors in the economy was in flux, with the future still uncertain. One of Trump's signature campaign promises was a major overhaul of the U.S. tax system. He proposed significant tax cuts for businesses and individuals, arguing that this would stimulate economic growth. While these cuts were welcomed by some, particularly corporations looking to reduce their tax burden, concerns lingered about their potential long-term consequences. Critics argued that the tax cuts would disproportionately benefit the wealthy, exacerbating income inequality. Furthermore, the significant reduction in government revenue raised concerns about the national debt. Economists warned that these tax cuts, coupled with increased spending in areas like defense and infrastructure, could lead to a ballooning deficit. Trade wars and their toll, a global tug-of-war. Trump's stance on international trade represented a significant departure from previous administrations. He adopted a protectionist approach, arguing that existing trade deals were unfair to American workers and businesses. This approach manifested in the imposition of tariffs on goods from countries like China, igniting trade tensions and raising fears of a global trade war. These trade wars had far-reaching consequences. Global supply chains, intricately interwoven through decades of globalization, faced disruptions. Tariffs increased the cost of imported goods, fueling inflation and squeezing consumers' wallets. The uncertainty surrounding trade policy made businesses hesitant to invest, potentially hindering economic growth. The combination of tax cuts and increased spending under the Trump administration put significant pressure on the U.S. national debt. This debt, already substantial before Trump took office, ballooned during his presidency. Economists sounded alarm bells, warning that a soaring national debt could have severe consequences for the economy. One of the most significant concerns was the potential for higher interest rates. As the national debt grows, the government must offer higher interest rates to attract investors to buy its debt. These higher interest rates ripple throughout the economy, making it more expensive for businesses to borrow money for investment and expansion. This can ultimately stifle economic growth and job creation. Trump's approach to environmental policy marked a sharp turn away from the conservation efforts of his predecessors. He expressed skepticism about climate change and rolled back regulations aimed at reducing carbon emissions. This approach drew criticism from environmentalists and scientists who warned of the long-term consequences of inaction on climate change. The rollback of environmental regulations benefited industries like fossil fuels, which faced fewer restrictions on their operations. However, critics argued that this short-term gain came at the expense of the planet's long-term health. They warned that Trump's policies would accelerate climate change, leading to more extreme weather events, rising sea levels, and other environmental disasters. Trump's America First agenda extended beyond economic policy to encompass foreign policy and global relations. He withdrew the United States from international agreements, such as the Paris Climate Accord and the Iran nuclear deal, and adopted a more confrontational approach with traditional allies. This approach created uncertainty on the global stage, as other nations grappled with the implications of a more isolationist and unpredictable United States. The uncertainty surrounding U.S. foreign policy had economic repercussions as well. Businesses, facing uncertainty about trade deals and geopolitical stability, became more hesitant to invest in international markets. This uncertainty threatened to dampen global economic growth, as businesses adopted a wait-and-see approach to Trump's foreign policy moves. The economic legacy of Donald Trump's presidency is complex and multifaceted. His tenure in office was marked by a series of bold and often controversial economic decisions that have sparked debate among economists, policymakers, and the general public alike. His policies, from sweeping tax cuts aimed at stimulating business investment to aggressive trade wars intended to protect American industries, left a lasting impact on the U.S. economy and the global financial landscape. These measures were designed to boost domestic growth and create jobs, but they also led to significant disruptions in international trade relations. While some sectors, such as manufacturing and energy, experienced growth and prosperity under his watch, others, including agriculture and technology, faced challenges and uncertainty. The uneven effects of his policies created a mixed economic picture, with some regions and industries thriving while others struggled to adapt. The long-term consequences of his policies, particularly the ballooning national debt and the rollback of environmental regulations, remain to be seen. Critics argue that the increase in national debt could pose significant risks to future economic stability, while supporters claim that the deregulation efforts were necessary to unleash economic potential. Only time will tell how these decisions will ultimately shape the U.S. economy and its role in the world. The debate over the effectiveness and impact of Trump's economic policies continues, with experts weighing in on both the positive and negative outcomes. One thing is certain: the Trump presidency left an indelible mark on the global financial system, the consequences of which will continue to be felt for years to come. As the world watches and analyzes the unfolding effects of his economic legacy, the true extent of his influence on both the national and international stages will become clearer. Pause 3s. The Trump administration from 2024 to 2028 is expected to have significant impacts on the cryptocurrency market. Experts predict increased regulation, which could lead to short-term volatility, but long-term stability. Investors should be prepared for a roller coaster ride as policies evolve. The administration's stance on blockchain technology could also influence market dynamics, potentially fostering innovation and adoption. Stay tuned for more insights on how these changes could shape the future of digital currencies. Pause 2s. As the regulatory landscape shifts, both seasoned investors and newcomers will need to stay informed and agile. The administration's policies may introduce new challenges, but they also present opportunities for growth and innovation. The coming years promise to be a transformative period for digital currencies, with the potential to redefine financial systems globally. Pause 2s. Whether you're a crypto enthusiast or a cautious observer, understanding the implications of these policy changes will be crucial. As we navigate this evolving terrain, we'll continue to provide the latest updates and insights, helping you stay ahead in the fast-paced world of digital finance. The future of cryptocurrency is still being written, and together, we'll uncover what lies ahead.